Hello, today welcome to Business Line. Please watch this video at 1.5x speed. And so today is 8th August 2023. The first article is on HAL. So Hindustan Aeronautic Limited, a government-owned defense public sector undertaking in India, they anticipate a significant revenue growth starting from its fiscal year of 2025, driven by the expected delivery of their 83 LCA Tejas Mk1A aircraft to the Indian Air Force. Now, around 50% of HAL's almost 82,000 crore order book is linked to the LCA project. The first Tejas Mk1A is scheduled to be handed over in February next year. HAL is aiming for an 8% annual revenue growth and aims to maintain a EBITDA, which is basically earnings before interest, taxes, depreciation, and amortization, of around 27% for the next 2 years. The company plans to achieve a double-digit growth in revenues from FY 24 to 25 onward due to this LCA project's contribution. Now, HAL is also targeting around 10% of its revenue from exports, with countries like Argentina, Philippines, Egypt, Afghanistan, uh, especially Afghanistan, expressing interest in various versions of the LCA Tejas and advanced light helicopter Dhruv. Now, the company is increasing its research and development spending and is engaged in negotiations with General Electric for the co-development of the F-14 engines to power the Tejas Mk2. So this article kind of talks more about it. The next article is about Blackstone. Now, it'll be interesting to see how mergers and acquisitions are taking place in India. Blackstone is basically reportedly in discussion with Singapore's Sovereign Wealth Fund, which is GIC, to sell its 50% stake in certain commercial real estate in Pune with the Panchal Group, and in Hyderabad, which is the Salarpuria Satava Group. Now, these projects encompass almost 26 million square feet of leasable land, including a 5 million square feet under construction. So, and are valued at almost $4 billion dollars. The potential deal might amount to almost 1.52 billion, but the final pricing remains subject to the valuation consideration. The project includes Panchil's Eon Free Zone, then Tech Park, etc., and also Salarpuria, Knowledge City, Knowledge Capital, Knowledge Park, etc. Now, Blackstone maintains several projects with this real estate group, but only selected projects are involved in the deal with GIC. Blackstone is not exiting their joint venture entirely, but rather divesting its stake in specific projects. Now, GIC is a strong contender for this deal, but there is also interest from other buyers. Let's look at the background. Originally, Blackstone had aimed to combine all commercial properties under it into a joint venture along with its office portfolio to create like Asia's largest real estate investment trust, which is REIT, and list it in the stock market for trading. However, their strategy shifted with Blackstone now focusing on monetizing certain real estate holdings in India. Now, although Blackstone still plans to have a REIT for its office portfolio, the portfolio size has been substantially reduced. And this article also talks about the slowdown in US and Europe. Traditionally, major sources of the office occupiers in India has been impacted by office space absorption. So because slowdown in US and Europe has impacted these office space absorption. So in the first half of 2023, office space absorption in India decreased by almost 5% year on year to 25.8 million square feet, with a 6% decline in June quarter. And they were most prominent in Bengaluru, Hyderabad, Bengaluru, Mumbai, and Kolkata. The next article is on Air India. So this is also an interesting article, how Air India is getting benefited out of it. So Air India is now set to receive Airbus 350 and Boeing 737 MAX that were originally intended for Russia and Chinese carriers, but the sanctions imposed on these countries have led to a quicker delivery timeline for Air India, which had ordered almost 470 aircrafts in February. The first batch of Airbus 350 planes, which was initially designed for Aeroflot, will be delivered to Air India as sanctions prevented their delivery to Russia. Now, similarly, Boeing 737 MAX aircraft, which was ordered by Chinese carrier and Leisure, will be redirected due to a local government ban that was lifted earlier this year. Now, these planes are expected to join Air India's fleet between September and December. Also, Air India's order book includes around 35 uh, A350 1000, 6 A350-900, 20 Boeing 787 Dreamliner, 10 Boeing 777X wide-body aircraft, 140 Airbus A320 Neos, 70 Airbus A321 Neos, and 190 Boeing 737 MAX narrow-body aircraft. The swift acquisition of these planes within months of placing the order also highlights sort of the strategic uh, you know, advantage in an industry marked by manufacturing backlog and limited delivery slot. Now, to prepare the new aircraft, Air India's low-cost subsidiary, which is AIX, Air India Express, is intensifying pilot recruitment and training effort. The airline aims to hire over 4,200 cabin crew and 900 pilots to support its ambitious growth plan. AIX has already hired around 150 Boeing 737 pilots over the past 18 months and is offering attractive incentive and flexible contract to its new recruits. Pilots are undergoing rigorous training, including a 3-day simulator program for the Boeing 737 MAX to ensure seamless readiness for the new aircraft. The other articles are SEBI to set disclosure norm for unlisted conglomerates, because for publicly available companies it's clear, but for unlisted companies of that conglomerate, the disclosure requirement is not very good, but very clear. So this is a very good requirement. The next is India Cement, again 75 crore loss, but EBITDA is positive. Uh, the next is, we see that banks gold loan is increasing by almost 1 lakh crore mark soon, and this is a good sign because uh, people are taking loan based on a secured asset like gold. So let's see how it works out. And these are mostly people from a lower income household. Interesting companies to look at is Muthoot Finance and Manappuram Finance. Hopefully, they will have good earnings this year. And also another one, top 15 insurance firms to adopt Ind AS from April. So Ind AS is an accounting standard. Interesting article which says how tomatoes under CCTV and double locks. But one good number over here is almost 4,000 crates of tomato can now fetch you almost 3.5 crore. So that's interesting. 4,000 crore kg of tomato is like around 2,000 rupees, 20,000 rupees. So yeah. Vijay Shekhar Sharma, the founder of Paytm, has reached an agreement to acquire 10.3% stake in Paytm from Antfin in Netherlands holding BV. The acquisition will be carried out through his overseas entity, Resilient Asset Management BV, via an offer off-market transfer. Now, this move will increase Sharma's total shareholding in Paytm to 19.42%, while Antfin, which is basically a Chinese company, stake will decrease to 13.5%. The value of this 10.3% stake based on August 4 closing price amounts to almost 626 million. Resilient will also issue optionally convertible debentures to Antfin as a part of the acquisition, allowing Antfin to retain the economic value of the stake. Now, no cash payment will be made for this acquisition, and no guarantee or assurances will be provided by Sharma. Despite the transfer, there will be no change in Paytm's management or control, with Sharma continuing as the managing director and the CEO, and the existing board remaining unchanged. In addition, Paytm announced that PricewaterhouseCooper, which is the chartered accountant LLP, has resigned as the statutory auditor of its material subsidiary, Paytm Payment Service Limited (PPSL). Uh, SR Bartleyboy and Associates LLP has been appointed as the new statutory auditor for uh, PTM for PPSL following the appointment of SR Patliboy Associates as the auditor for PTM Holding Company, 197 Communication also. The next is interesting article on Pepsi. Again, lots of opportunity with respect to warehouse premium chips. We had a strong summer and there was rural demand. It also talks about a virtuous cycle of GDP spend, per capita income, consumption, and their focus is on both rural and premium. Rural with low cost 5 rupees wala packet and premium with expensive items. PepsiCo India reported a notable increase in net profit reaching to 255.75 crore in FY23 compared to almost 27 crore in FY22, making it sixth consecutive year of profitable growth. Total revenue rose by approximately 29% to around 808,129 crore, according to the company's recent filing. Despite inflationary pressure, the company achieved strong double-digit revenue growth, driven by both its food and gourmet segment. The beverage segment's growth was supported by a strong summer season and rural demand uptick, while the food segment saw underlying volume growth through innovation like Lay's Gourmet or Dorito, the Sizzling Hot. So those are the yeah. PepsiCo India's plan to continue its strategic growth trajectory and is considering setting up its fifth snack plant in Assam. The company aims to increase spending on brands and boost capacity. It is focused on expanding its presence in both rural areas and top 100 cities by offering products at various price points to cater to different consumer segments. The company's distribution has also expanded by 2 lakh additional outlets over the past 2 years. Now, despite challenges posed by unseasonal rain impacting sales, particularly in beverage categories skewed towards, say, summer sales, PepsiCo India remained committed to building consumption occasions throughout the year. Responding to competition, including the entry of Reliance, the company's president sees competition as healthy, promoting increased per capita consumption level and the expansion of market categories. So, yeah. Then there's an article or India Cement. India Cement and other cement companies also, although they have reported positive EBITDA, which is earnings before interest, tax, depreciation, and amortization, in the first quarter of the current fiscal year, and it also marks a turnaround after 3 consecutive quarters of negative EBITDA. However, the company has recorded a net loss of 75 crore for the June quarter compared to a net profit of 76 crore in the previous quarter. And this loss was particularly attributed to reduced selling price and volume loss. Now, despite facing intense competition leading to a supply overhang, the first quarter saw a drop in cement selling price. Though variable costs were reduced due to lower fuel prices, the decline in variable costs led to a positive EBITDA of 12 crore for the quarter, compared to a negative EBITDA of 140 crore in the previous quarter. However, the decrease in variable cost was offset by lower realization, resulting in reduced margin. The net plant realization stood at almost 3,965 per ton in quarter one, which was down from 4,112 per ton in the same period last year. The company's cement sales for quarter one were lower at 26.57 lakh ton compared to 27.85 lakh ton in the previous quarter. Now, this is primarily due to liquidity constraints stemming from lower margins and losses. Now, India Cement is taking steps to address these variable costs. That's what the company says over here. Uh, a new cement plant mill will come at Shankar Nagar and is expected to be commissioned in the coming quarter. The company has also engaged FLS and Krupp Industries for a study on refurbishment and modernization and has also partnered with Boston Consulting Group to improve efficiency in 3 of its plants in Andhra Pradesh. To address liquidity challenge, the company plans to monetize some lands in Andhra Pradesh and Tamil Nadu as the demand scenario is expected to improve in South due to increased infrastructure project. India Cements aim to raise funds to cover working capital requirement of 150 crore and an additional 250 crore for capital expenditure. As of June 30, the company's net debt stood at 3,090 crore. Yeah. The next article is on Godrej Consumer. Godrej Consumer, a fast-moving consumer good, so it's also considered a FMCG, right? The short form. Reported a 7.8% decrease in net profit to 318 crore from the June quarter compared to 345 crore in the same period of the last quarter. The profit for the quarter also declined by 29.6% from 452 crore reported in the March quarter. Now, despite the decline in profit, the company recorded almost a 10.37% growth in revenue from operation, reaching to 3,488 crore compared uh, to 3,000 crore in the same period last year. Now, revenue also increased by 7.75% to 3,200 crore in the previous quarter. Now, Godrej Consumer announced plans for capital expenditure of almost 900 crore to establish new manufacturing sites in Tamil Nadu and Madhya Pradesh. The company aims to enhance capacity in home care and personal care categories, which currently operates at 75 to 80% utilization. The expansion is expected to increase capacity by 20% in these segment and will be funded through a combination of internal accrual and debt. Now, on this side, there are three interesting articles. The first one is regarding Imami. Imami, again an FMCG, reported a significant almost 88% increase in consolidated net profit for the first quarter of FY24, and its profit reached to almost 136.75 crore. The company's consolidated revenue also grew by 7% to 826 crore. This boost in net profit is attributed to strong growth in both its domestic and international business segment. Next article is from Dispris, which is a corporate lending and skilling company, has also secured almost 30 million in Series C funding round. Now, Lumos Capital Group, which is also a 361 asset by IIFL, led funding with participation from K Capital, Cois, and Dallas Venture Capital. The fund will be used for global market expansion and product development. The next article, the famous Waaree Energies. Now, Waaree Energies Limited, a solar panel manufacturer, has raised almost 1,000 crore in equity and funding led by Value Quest. And this funding will be used to expand capacity at an additional 6 gigawatt in addition to the existing capacity of 12 gigawatt. Now, there's an interesting article on the auto industries, and we can see how the year-on-year numbers are looking like. Almost all of them are grown, especially three-wheeler and tractor. Yeah. So the automotive industry is entering into an intriguing August, which is characterized by mix of opportunities and challenges. That's what these guys are saying. Positive indicator include an anticipated uptick in the two-wheeler segment due to festival, balanced supply demand, and new model launches. The three-wheeler category is also witnessing growing interest, particularly in the electric variants. The passenger vehicle segment is expected to benefit from the festival demand and new product introduction, especially in the SUV category. However, challenges persist. The entry-level category of two-wheeler segment remains a concern. Streamlined loan disbursements are uncertain in the commercial vehicle space, and the passenger vehicle segment has seen inventory levels breach by the 50-day mark in anticipation of the upcoming festival season. Moreover, the Indian Meteorological Department projection of below average rainfall in August could potentially impact purchasing power, particularly in rural areas. Now, there's this FADA. What they say is monthly retail sales data indicates that passenger vehicle sales grew by 4%, and in July, two-wheeler sales increased by 8.15%, commercial vehicle 2%, three-wheeler grew significantly by 74.35%, and auto industry sold almost 17 lakh 70,000 this year, which marks a 10% year-on-year growth. The next talks about auto parts, basically auto ancillary industry, and very interesting article. So the auto industry, component industry, achieved its first or highest ever turnaround of 55.60 crore in fiscal year 22-23, making a growth of 32.8% 8 percent compared to the previous year's 4.2 lakh crore. 2 lakh crore. The industry is anticipated to maintain double-digit growth in the coming period. The Automotive Component Manufacturer Association of India, ACMA, reported a steady 15% growth in the aftermarket, valued at almost 85,000 crore. Now, component sales to domestic original equipment manufacturer (OEMs), domestic OEMs rose by almost 39.5% to 4.76 lakh crore, and export increased to 5% by 1.61 lakh crore, while import also grew by 11% to 1.63 lakh crore. But net it's same. ACMA president says that highlighted that the industry's significant contribution to vehicle sales growth and steady export growth amidst challenges in global demand with improvement in supply chain issue also and increased vehicle sale, the auto component sector is expected to perform well also in 2024, uh, and this would be supported by robust export and strong domestic aftermarket. So this is the positive outlook. One can read through this one. The next article on Gland Pharma. No, I'll keep it short. So Gland Pharma reported a 15% decrease in net profit to almost 194 crore in the first quarter of June 30 compared to 229 crore in the same period last year. However, the Hyderabad-based company's total revenue grew by almost 51% to 120, 1209 crore from 857 crore. Gland Pharma's operating revenue from the quarter was 1,209 crore, showing a year-on-year growth of 41% with an EBITDA of 298 crore. The company highlighted its commitment to, again, quality and regulatory environment following a successful US FDA inspection. And also, there was a new hire, Prakash Vittal Paliga, as the CEO of the company. Next is another cement company, Ramco Cement. Again, bad quarter. So Ramco Cement reported a lower net profit of almost 79 crore for the quarter ending June 30 compared to 112 crore in the previous year, despite higher sales in cement. The company's supply disruption and active and monsoon, these were the basically the culprit. Uh, the company's EBITDA, oops, yeah, so the growth in sales volume could have been better if not for sand unavailability, supply disruption, and that infrequent monsoon. The company's EBITDA for the quarter grew by 14% to 349 crore, and here with an EBITDA margin affected by elevated fuel prices and weak cement prices. The cement capacity utilization was 79% for this quarter, and the company incurred almost 284 crore for capacity expansion and plans to commission two dry mortar project units in Andhra Pradesh and Orissa during the fiscal year. Interesting article. So, iAngel, Chennai, an angel network backed by India Accelerator, has introduced a Chennai chapter to support the growth of startup community in South India. The network intends to invest 100 crores across 50 companies, so 2 crore each company probably. This initiative aims to foster the startup ecosystem by collaborating with various entities, institute, collaboration, corporation, including startup, IIT, KSUM, and etc. Yeah. Next is again a premiumization play, and one could look at this landmark car, which could be which are dealers for Mercedes. Uh, right. Yeah. So Mercedes-Benz is set to launch its new GLC on August 9th, anticipating a 15% sales growth in the SUV. They have already sold 2.6 million Mercedes GLC last year worldwide and was also the highest selling model for the car maker. The GLC, uh, the company expects that the new GLC to contribute about 15% of its sales in India. The SUV will come in diesel and petrol variant with some mild hybrid technology and enhanced safety features. There's a lot of interesting features that is over here. Now, Mercedes India aims for double-digit growth for the full year and is seeing emerging market, especially emerging market like India and especially tier two cities in emerging market to contribute in the demand growth. One interesting thing that they have also compared is New Zealand versus India, and how India has a greater percentage of Maybach and S-Class, which are driven by chauffeurs, whereas New Zealand has AMG with higher self-driven cars. So interesting how it is. Now, next is more of a geopolitical stuff. Interesting. Now, UAE has a 2 billion investment in food park yet to take shape. UAE promises almost 2 billion investment in food parks in India made during this India, Israel, UAE, USA summit in 2022 and yet to be realized over a year due to raised policy concern. Although several meetings have taken place to address this concern, UAE representatives have not shown any urgency in moving forward with this investment. The UAE's concern revolve around India's Essential Commodity Act over here, which covers crop identified for food parks. The act potential impact on export curb has led to uncertainty. However, India has offered solution to work around these concerns, including assured export of processed form of identified commodities. The UAE proposal to invest in food park dates back to almost 2018, and the delay is causing increase of worry in India. So this it's taking a bit of time. Next interesting article also for power sector, maybe Power Grid and all of those companies. India, Nepal, Bangladesh are working on a groundbreaking tripartite power trading deal that will see Nepal supply almost 500 megawatt of hydropower to Bangladesh using India's transmission lines. So anybody working on transmission, this could be a area. This arrangement aims to boost cross-border electricity trading in South Asia, and provide avenues for East green energy trade as well. Plans include a dedicated transmission line connecting Nepal and Bangladesh through India. The three-way deal involved Nepal providing hydropower to Bangladesh via India's transmission line, and in return, India seeks access to lay transmission line in Bangladesh for connecting the northeastern state. This initiative holds potential for expanding regional energy cooperation while considering India's energy supply and security. So probably a good play in transmission and all of these areas, distribution. Also, you can note new categories, ethically returned investment. Next is an article on steel, simple article. India has turned a net importer of steel in July, importing almost 5,87,000 tons and exporting around 5,13,000 tons. The shift is primarily attributed to lower price steel imports, especially from China, and a slowdown in the steel export order. Imports exceed exports by 74,000 ton in July. This is the fourth time in over a year that India has become a net importer of steel, while steel exports increased on a year-on-year due to base effect. They remained relatively flat on a sequential effect. Non-alloyed steel imports increased significantly, while alloyed and stainless steel shipments dipped. Despite the July shift, India remained a net exporter of steel from the April to July period. Next is an article on gas. So, Director General of Hyderabad Hydrocarbons, sorry, not Hyderabad, uh, has requested the land from sales Durgapur Steel Plant in West Bengal for SR oil and gas to conduct exploration activities for the coalbed methane gas. A 50 cross 50 meter land parcel has been sought for a short-term lease for 6 months for drilling a core well. The land will be taken on a lease with applicable charges paid. Now, SR Oil has identified a well location within the DSP land for drilling core holes to determine available reserves and viability. The ministry is involved to expedite the land handover. SR Oil has received a petroleum mining lease and executed a gas sales and purchase agreement with GAIL for its gas-based expansion plan. So yeah, I mean, this article also gives what are they going to do over here. That. Now, some regulatory, I don't know how, I mean, this we would see some changes in the insurance sector. So anybody interested over there, they could see how this will impact the insurance sector, especially from an earnings point of view. So the IRDAI, Insurance Regulatory and Development Authority of India, has directed the top 15 insurance company across life and non-life sector to adopt the new IND IAS framework for April 1st, 2024. Now, this move aligns Indian accounting practices with global standards and aims to enhance transparency in insurers' financial position, risk exposure, and profitability. The adoption of this revised standard in the AS 117 is designed based on IFRS 17, requiring insurers to declare unbiased estimate of future cash flow, adjust for non-financial risk, and present revenue differently. Now, 15 companies with foreign equity partners or strategic collaborator have been identified for the pilot phase of the adoption, excluding straight run insurer for now, which is our very good LIC. Uh, the transition is also being coordinated with the shift to risk-based capital regime from the existing solvency framework to ensure a smooth transition and capital adequacy. The new accounting standard will replace the current IND AS 104 insurance contracts. So most of it could be seen over here, which what is here. This is also interesting. Bank getting into gold loan, also squeezing the gold loan space. So there's a lot of competition coming out, uh, which is not good for gold loan NBFCs like Muthoot or Manapuram. But let's see. Uh, Bank's loan against gold jewelry portfolio in India is projected to surpass 1 lakh crore in the coming months, driven by strong year-on-year growth. The portfolio witnessed a robust 26% year-on-year growth to reach 95,000 crore as of June 30, 2023, according to RBI data. The growth has been accelerated by factors such as high yield, low default, and simplified recovery process through auction. Both private and public sector banks are now actively focusing on this portfolio, with public sector bank also venturing into gold loan due to the secure nature of such lending and its qualification for priority sector lending. So basically agriculture and farming from there. The rise in gold prices is also contributing to the increase in gold loan portfolio. Yeah. Next, sorry, over here. So these are two side articles. Uh, Standalone health insurer Star Health and Allied Insurance has formed a strategic corporate alliance with Standard Chartered Bank. Uh, as a part of the collaboration, SCB will distribute Star Health's insurance product through its widespread branch network across India. SCB's network companies, 100 branches in 42 cities. Now, next is Japan's mobile entertainment company Mixi has introduced India's inaugural 50 million corporate venture fund. The initiative aims to support early stage entertainment startups in India by serving an investment avenue through which Mixi can identify and assist startups focusing on entertainment sector and consumer service. The launch of this CVC fund reflects Mixi's objective to promote innovation in communication and entertainment in emerging countries. Then, yeah, this is important. Bank wrote off almost 14 lakh crore bad loans between FY 2015 and 23. That's almost $200 billion. Okay, not close, but almost, yeah. Scheduled banks in India have written off loans totaling to over 14 lakh crores from 2014 to 2023, with nearly half of the amount being related to large industries and services. However, the total recovery of this written off loan was just 2 lakh crore. As informed by the Finance Ministry in response to a question in the Lok Sabha, the data provided showed that these write-offs were part of a regular exercise by bank to clean up their balance sheet, avail tax benefits, and optimize capital in line with RBI guideline and policies. Despite these write-offs, borrowers remain liable for repayment and bank continues recovery effort on these accounts through various mechanisms. Yeah, you can read more on this. Next, State Bank of India anticipates providing 3.5 lakh crore in corporate loans during the remainder of the financial year, driven by increased investment from private companies in key sector. About 80% of this loan demand is from private sector, especially in sectors such as renewable energies, batteries, EVs, steel, cement, and other than that, steel, cement, road infrastructure, and airports. The loans are expected to boost SBI's corporate loan book by almost 12 to 13% this fiscal year. SBI is cautious about the potential stress in the retail loan segment and is mindful of the potential impact of high interest rate on demand. The SBI stock has also seen a modest gain over the last year, and its valuation might not fully reflect the value of its subsidiary, estimated to about 2.5 to 3 lakh crore. Now, there's another article, crypto fraud. So the ED has confiscated around 1,144 crore in proceedings of crime and apprehended almost 20 individuals in case related to cryptocurrency and virtual digital asset. Additionally, under the FEMA, Foreign Exchange Management Act, assets worth 270 crore has been seized and show cause notice has been issued to the cryptocurrency exchange WazirX and its director for transactions involving cryptocurrencies amounting to 270,000 crore. The ED is investing cases of cryptocurrency fraud and money laundering involving crypto exchanges. The anonymity linked with virtual assets often attract criminal as per the Financial Action Task Force. The ED's action has been carried out in accordance with the Prevention of Money Laundering Act, the MLA 2022. Yeah, interesting. Now there's another article, Moglix. Moglix, which is a B2B industrial goods e-commerce unicorn, aim to have profitability within the next 18 months while projecting a growth rate of 30 to 40% year on year. That's great. According to its founder Rahul Garg, having exhibited a growth rate of 87% in FY22 and doubling its revenue to 307 million in FY23, Moglix intend to double its current revenue, its current 5 lakh SKUs, which is stock keeping unit. It has expanded internationally to West Asia and launched CreditLix, which is a digital supply chain financing platform to offer working capital solution for vendors and suppliers. With 469 million raised from investors like Tiger Global, AlphaWave Global, Moglix envision playing a significant role in digitization of the B2B commerce. They want to become the Flipkart and Amazon of the B2B world. That's the main thing. Next is PB Fintech, which is the parent company of Policybazaar, posted its first quarter net loss of 111 crore, showing significant improvement from the 204 crore loss in the same quarter of the previous fiscal year. However, the net loss widened sequentially from 9.4 crore in the previous quarter. The company's core online business saw a 39% increase in operating revenue to 516 crore. Overall, PB Fintech operating revenue, which includes both Policybazaar and Paisabazaar, reached 666 crore, which is a 32% rise from the 505 crore in the same quarter. And yeah, the company reported some operating income of 876 crore. So they are interesting businesses which needs to be checked. Another interesting article on Temple Town. So hotel chains are capitalizing on the rising demand for pilgrimage tourism. It's also becoming a big thing by launching new properties and upgrading existing ones. Marriott International recently opened a Le Méridien Hotel in Amritsar, while ITC Hotel introduced a Fortune Bay branded hotel in the same city. Religious tourism have been driving growth, with hotels in pilgrimage destinations experiencing increased footfall. Other chains like IHCL and Radisson Group are also expanding their presence in such areas, opening hotels in cities like Tirupati and Guruvayur. The buoyancy in the travel and tourism sector, along with government focus on infrastructure development for religious sites, has contributed to this trend. Amritsar and Varanasi are among the cities with significant potential for hotel growth in pilgrimage regions. So, yeah, interesting. Next is Qatar Investment Authority, which is a subsidiary of INQ Holding, has acquired almost 2.7% of the equity in the at 920 each for 3956 crore of Adani Green Energy equity. At the same time, Infinite Trade and Investment, which is a promoter entity of Adani Green, sold almost 2.8 crore percent of its equity by selling 4.5 crore share for 920, totaling to 4,142 crore. This marks Qatar Investment Authority's second investment in the Adani Group after acquiring a 25% stake in Adani Electricity Mumbai in 2020. Adani Green's promoter entity have been selling stake to repay share-backed financing. Last month, Adani Green's board approved raising 12,300 crore through a qualified institution placements. Next interesting news, Tesla names Indian origin Vaibhav Taneja as CFO after previous CFO Zachary Kirkon announced his decision to step down. Taneja, who is currently the chief accounting officer of Tesla, will be taken on additional role of CFO. Now, Kirkon's departure marks the end of almost 13 years at Tesla, during which the company experienced significant expansion and growth. Taneja has been with Tesla since 2016, holding various finance and accounting positions. The next article is on Google Pay billing. Yeah. So the Chief Justice of Madras High Court has declined to urgently list the appeal of 14 startups against previous ruling by a single judge. The earlier ruling had refused to interfere with Google's user choice billing policy for app developers. This matter is expected to be considered for admission on and a hearing on stay application later in this week. Last week, a single judge of Madras High Court dismissed the suit brought by about 14 domestic startups like Bharat Matrimony, Shadi.com, Unacademy against the Google policy. The next article over here, something on Sati Finance. Article which says again climate change could reduce India's credit rating. Um, a study led by researchers from the University of East Anglia, which is in UAE, and the University of Cambridge suggests that India's sovereign credit rating could face a downgrade due to the impact of climate change and rising temperature volatility as early as 2030. The study, which is the first to integrate climate science with financial indicators, indicate that deferring green investments will increase borrowing costs for nation, translating into higher costs of corporate debt. The study used artificial intelligence to simulate the economic impact effects of climate change on Standard and Poor's rating for 108 countries. Without emission reduction, 59 nations could see sovereign credit rating drop within the next decade, and adherence to the Paris Climate Agreement would mitigate these impacts. So this could be an interesting article with a lot of numbers and ESG. But yeah, Ramco Cements, and then this is so Shobha. Then we have two articles over here. One in, I mean, these are all Think. I'll try to read it out a bit, but anybody can read it. Yeah, something like this. So first we target this one. Uh, a recent report by Niti Aayog on multi-dimensional poverty has broadened the criteria for measuring poverty, including various needs from education and health to drinking water, sanitation. This expansion of criteria, which now lists 13 things needed to be avoided being classified as poor in a multidimensional sense. And this has also led to concerns about economic implications. These concerns stem from the fact that private goods have been treated as public and quasi-public good, deviating from economic definition. This shift affects taxation, investment, and borrowing by government, potentially diverting funds from investment expenditure aimed at increasing higher order public good. The article suggests that focusing on increasing income and expanding the tax base would be more sustainable solution to address these challenges. And the next one is on the online gaming industry in India, which has witnessed significant growth fueled by factors like smartphone penetration, internet connectivity, and large youth population. The Indian gaming industry is projected to grow at a compound CAGR of 28 to 30% from 22 to 25, with the number of gamers expected to rise. However, this growth comes with challenges such as addiction, overindulgence in online gaming, lifestyle changes, health impact. The WHO recognizes game disorder as a behavioral disorder affecting individuals' ability to stop playing even when it interferes with the other aspects of life. Indian studies suggest that a significant percent of adolescents suffer from internet gaming disorder. To address this issue, there needs to establish de-addiction infrastructure, initiate public education program, and encourage collaboration between government, uh, gaming companies, NGOs, counselor, parents, teachers to raise awareness and provide support for those affected by gaming addiction. The next is again MPC may hold rates in upcoming policy. I'll just zoom into this one. The economic backdrop for the upcoming MPC in India faces challenges both globally and domestically. Global manufacturing activity remained contracted with uneven performance across economies. Some advanced nation central banks raised interest rates despite cooling inflation, while others, like the Bank of England and Bank of Japan, have also signaled policy changes. In India, there are positive signs in terms of manufacturing and service PMI, tax collection, industrial production growth, and vehicle sales. However, concern persists about sustained weak growth in consumer durables, high urban employment, and weak private investment due to uncertain demand. The agricultural prospects have dimmed due to uneven monsoon and lower reservoir levels, impacting kharif sowing. This could affect farm incomes and food inflation. The Monetary Policy Committee may revise inflation projections upwards and GDP forecasts downwards. The RBI is likely to maintain policy rates and a withdrawal of accommodation stance due to surplus core liquidity, but the forward guidance will be more hawkish to prepare for a longer pause. So, yeah. So the next article is on fractional ownership platform, basically REITs, right? So fractional ownership platforms have emerged as an exciting development in India. Originally, you could have bought only one, say for example, the full real estate. Now you can have part ownership in a real estate. That's the idea. These platforms use technology to allow retail investors to invest in small portions of real estate properties, enabling them to diversify their portfolio without purchasing an entire property. While FOPs, which is fractional ownership platforms, offer convenience and access to real estate investing for smaller investors, they have been operating without proper regulation. Now, SEBI is now seeking a public comment on its proposal to regulate FOPs due to its concern about potential risk associated with this platform. Uh, SEBI's concern stems from FOPs registering as a broker under the RERA Act over here. Yeah, under the RERA Act, while soliciting funds as collective investment vehicle. SEBI is worried about issues such as lack of proper know your customer or anti-money money laundering checks, and the use of power of attorney structures could be misused. SEBI has chosen to recharacterize FOPs as micro, small, and medium real estate investment trusts. This approach brings these platforms under a regulatory framework that resembles the existing structure for real estate investment trusts. The proposal aims to distinguish between platforms focused on property development and those investing in completed income generating in properties. The micro, small, and medium rates can focus on localized, concentrated real estate bets, which might be appealing in smaller investors compared to larger diversified REITs. Now, while SEBI intends to avoid negative outcome is commendable. There is also a need to foster the development of new market. These proposed rules of FOP needs to strike a balance between regulating the sector and allowing innovative investments opportunity to thrive. And anyways, the real estate is in a bull cycle right now. So debt in low income uh, countries. So this is interesting. There's a lot of interesting graphs and charts. I don't know how this could be read, but yeah, I'll just give a summary of this one. Several low and medium income countries are facing severe external debt stresses, prompting questions about the possibility of a generalized debt crisis similar to those that led to debt write-offs in the past. The concern is whether current restructuring efforts are targeting the right areas to prevent a recurrence. It is important to differentiate between domestic and external debt and address the focus on sovereign debt in restructuring initiatives. While recent efforts have concentrated on managing aggregate public debt, little attention has been given to private sector external debt accumulated post-liberalization. Debt stress arises when a foreign exchange receipts from exports and primary income are insufficient to comfortably meet service payments on accumulated external debt. Evidence show a significant difference between LMIC and low and middle income country versus low income country regarding the ratio of total debt services to export receipt. The LMIC ratio declined after peaking in 1991 due to factors such as commodity price boom and debt restructuring initiatives. However, after 2011, The ratio rose in LIC, affecting the LMIC as well due to export performance difference. China's exceptional export performance has a significant restructuring benefit, and this has impacted the LMIC export and primary income receipts. Many LMIC didn't garner enough foreign exchange receipt to service their debts comfortably, and the COVID-19 pandemic also made the situation worse by disrupting exports and increasing import expense. To prevent future debt crises, there is a need to strengthen export capacity, limit imports through domestic production, and address global inequalities and structural inadequacies that affect less developed countries' export and worsen debt burden. The current strategy of combining currency devaluation with foreign investment liberalization and multinational dependence has not proven effective in boosting export and resolving debt problems. Alternative strategies are needed to address LMIC debt challenge. So this is the general story. Next is the central depository. This is over here. They have CDSL has announced a 28% year-on-year increase in its net profit for the June quarter. This growth is attributed to addition of new demat account, with the company adding 52 lakh accounts during this quarter, bringing to about 8.82 crore as of June end. So this is a very interesting number. Vishnu Chemicals has again successfully raised 200 crore from QIP, and yeah, many people involved. New article. SEBI plans mutual fund light regulation for passive funds. Uh, Focusing on non-discretionary investment decisions tied to benchmark index changing. Now, this new regulation intends to reduce compliance requirement and encourage innovation in the passive fund ecosystem. The unclaimed receipt amount of mutual funds uh, decreased slightly by 1.7 to 9 crore as of 1.7% to 977 crore as of March end. While there was unclaimed dividend also, which is almost around 8%, it has increased around 8%. So as of March end, there were almost 46 mutual fund registered with SEBI, with individual investor contributing around 97.1% of the total portfolios and 55% of the AUM. In FY 24-23, 251 lakh new SIPs were registered, bringing the total to 6.4 crore with an AUM of 6.8 lakh. Private sector mutual fund held the majority of the total folio and net asset, accounting for around 84% and 79% respectively. SEBI is also considering regulatory changes to address fees and expense charged by mutual fund scheme to enhance cybersecurity and resilience and promote transparency in disclosure by portfolio managers. Then there's an adjoining article where SEBI is planning to introduce I'm sorry, SEBI is also intending to implement disclosure requirements for unlisted companies that are part of conglomerates. While listed entities adhere to comprehensive disclosure rules, unlisted companies often lack the same level of requirement. Now, SEBI aims to identify, monitor, and manage risk posed by unlisted companies within conglomerate, especially those with complex set of listed and unlisted associate. Plans include enhanced group level reporting of transaction within conglomerates to improve transparency, potentially mandating annual disclosure of cross-holding and significant financial transaction. Now, notable Indian conglomerates include like Reliance, Tata, Aditya Birla, Adani, which recently faced scrutiny over alleged violation of various norms. So additionally, SEBI is working on norms to address unclaimed client fund, stipulating that brokers must attempt to locate client for fund if fund returned. If unsuccessful, unclaimed funds will be transferred to Stock Exchange Investor Protection Fund. So that's the main idea. So Concord Biotech, API manufacturer focused on fermentation-based product, open for IPO subscription until August 8th. The IPO is entirely a non-promoter offer for sale and has been subscribed 2.2 times as of Monday. Now, although it's priced at marginal premium due to the company's entry barrier and growth visibility, investors probably will subscribe. And Concord Biotech primarily manufactures API using fermentation with living organisms as starting material, okay, which distinguishes it from chemical-based API. The company has significant market share in various products and aims to leverage its new facility and expand into new market with solid financials, EBITDA and PAT margins, and underutilized capacity. The IPO valuation is supported. However, challenges like plant-related risk and working capital turnover needs monitoring. So these are the some of the risks that I mentioned over here. Oops. So two, I mean, brokers calls before that SBFC IPO Finance. Again, in IPO of SBFC Finance, almost 1025 crore was oversubscribed by 70 times, and due to large participation from institution buyer, and the IPO received bids for almost 798 crore against available 10.53 crore shares. Yeah, and SEBI announced that over here, SEBI announced industry bodies will create standards within next 3 to 4 months to facilitate implementation of rules related to rumor verification and ESG. Industry association will focus on areas such as structured digital database requirement under insider trading rules, disclosure norm. SEBI proposed the formation of industry standards forum in July to be led by industry association and aimed at enhancing capital formation and ease of doing business. The industry association plans to design standards for effective implementation in areas like rumor verification, disclosure requirement, ESG assurance, structured digital database required under PTI regulation. So ASSOCHAM, CII, FICCI has nominated representatives and agreed on the forum's architecture. So lots of things by SEBI. Now there are two brokers called Alembic Pharma and M&M. Alembic Pharma reported almost 4% higher Q1 than its previous quarter, driven by US formulation, non-US formulation and API. However, EBITDA margin were impacted by new facility costs. The company's PAT exceeded expectation by 19%, primarily due to low depreciation cost and low tax rates. Management forecast an outperformance of the IPM by up to 145 percentage point, and the 9% year-on-year growth was slower due to deferred seasonality. So yeah, I mean, the next target price could be 875, so there's a good amount. Mahindra and Mahindra exceeded revenue and margin expectation, beating BNP Paribas estimate and Bloomberg consensus estimate. The company's commitment to expanding SUV capacity is on track. With no semiconductor shortage, M&M is gaining market share in both SUV and tractor, with confidence in further gain through product launches in FY24. Despite new monthly SUV booking exceeding billings, they are in line with the targeted capacity of Q4 FY24. Concerns include Q1 retail volume being 10% below wholesale, inventory normalization, and Maruti Suzuki's aggressive SUV production increase as well. So we'll get to see how it works out. And there could be merger, which will uh, or demerger in the farm business, where we can see some value addition.